We now have the Fed ending quantitative tightening, the Fed slowly but surely starting quantitative easing as you're watching this video, as well as them continuing to cut rates in December. We are now left with stock markets almost at all-time highs, if not surpassing all-time highs. And you're looking at Bitcoin, you're looking at altcoins, and you're wondering what in the world is actually happening? Why aren't they moving? And when are they going to move if they start moving? We're going to take a look at that exact question in today's video. So if you are new to the channel, welcome. I'm Eric. Hit the like button, hit the subscribe button, and let's talk about it. So it has been a whirlwind of a roller coaster over the last 2 months. Remember, just in October, Bitcoin was at $126,000. Now it's roughly around $93,000. We've gone from greed to extreme fear in a hurry in the crypto markets, and we've seen similar movements in the stock market. Now, as I said, the stock market is recovering very quickly and is actually making some new all-time highs. And the S&P 500, which of course tracks the 500 best companies in the States, is just around all-time highs. And if you look at the fear and greed sentiment in the stock market, we are back in neutral, where just a couple weeks ago, we were in the extreme fear and there was a lot of uncertainty, a lot of fear, and we had, a total collapse of investor sentiment. Now, if you take a look at some of the indices that we have in the stock market, we can see first and foremost, the Dow Jones is now sitting at a new all-time high around 48,700. If we, zoom out here, go to a weekly chart, you can see that, of course, investing in, indices is a great way to park some of your capital for the long term, because typically speaking, the returns on, the US stock market anywhere from 8 to 10% over a longer average of time. So with that, we have the Dow Jones basically at new all-time highs. And again, just zooming in on a day chart, you can see the uncertainty over the last few weeks. We've had, a big collapse in the Dow Jones over this week here, but it's just gone all the way surpassed the previous all-time high. And that is partly in line with interest rates going down, as well as QE starting. Now, if we take a look at the S&P 500, which most of you may be a bit more familiar with, if you look at, what happened to the S&P 500, zooming in here, we are just shy of the all-time high, which currently sits around 69.20. Now, again, over the last few weeks, we can see that from October all the way to the middle portions of November, the S&P was down about 5-6%, and crypto was down significantly with it as well. But we've seen that major rebound in the price of the S&P, and right now, we're just shy of this all-time high, and likely in the next few days, I would imagine that we do break these highs. So, with that being said, why is this being seen in the stock market and not in crypto? Because if you remember, there has been countless amounts of analysis on the differences between Bitcoin and the S&P 500, both being risk-on assets, and the comparison between the two. If you look at it right now, we've seen an absolute deviation from what we've seen in the past. So typically speaking, if you are one of the ones that says the S&P, lags to Bitcoin, or vice versa, Bitcoin lags the S&P, we are just going to compare them for the sake of comparing them in terms of broader moves. So if you look back to, let's say, the April crash when we had the tariff news and nobody knew what in the world was happening in the markets, well, both the S&P and Bitcoin crashed quite heavily, and it was very much so correlated between the two asset classes. Now, come April, we had the bottom of, the stock market, bottom of Bitcoin, and then we had a nice rally all the way up until, October, which is where we see a massive collapse in the price of Bitcoin, as well as a collapse in the stock market. Now, one could obviously argue here that the stock market lags Bitcoin because Bitcoin topped out before the stock market did later in October. Again, I'm not specifically saying that one lags lags the other. I'm just looking at the broader move to show you that historically speaking, we've seen a correlation between the two. Now, what we have seen recently is, the same dip in the S&P that we saw in Bitcoin. Of course, Bitcoin's dip's going to be a lot bigger because we're talking crypto here. But we have not yet seen that bounce on Bitcoin. Bitcoin has bounced from, roughly $80,000 all the way to $93,000 as it is now, but it hasn't bounced as much as what the S&P did, because if you compare the S&P, it literally bounced to almost its all-time high, whereas Bitcoin hasn't done so just yet. So in that sense, we are currently still seeing Bitcoin lag the S&P 500 in terms of that broader move. And if we take a look at history and typically what has happened to Bitcoin when quantitative easing has started, when the Federal Reserve balance sheet started going up, which is going to happen in the next few weeks. If again, we pull up a chart of Bitcoin, we can see that if we, plot the US balance sheet or the federal balance sheet with it, if we go ahead and do that, you're going to be able to see one thing very clearly here. So if we go and, plot this, make it all nice for you, put this in regular scale, put this in regular scale, we can go back to 2019 in September when QE really started taking effect. Again, we've talked about this in our Discord. We've talked about it in yesterday's video. The QE that we're seeing is not called QE because it's not necessarily stimulating the economy. They are calling this, federal balance sheet management. But ultimately speaking, that's kind of what we saw in 2019. In this phase of QE before we really saw stimulus because of the pandemic we saw back then. But the point I'm trying to make here is that when QE actually started, we can see that Bitcoin had already made an all-time high, and it leading into QE, it actually dropped 25 or so percent as the Fed started printing back money. Now, it's interesting too, because even after the Fed started printing money, we can see that Bitcoin continued to drop and dropped another 37 or so percent as the Fed is printing money. You can see the balance sheet is going up, but Bitcoin has essentially gotten down, a total of 60 to 65% in the span of July 2019 all the way to November 2019. So within the span of, roughly 5 months, we've seen a major collapse in Bitcoin, even though we saw the Fed start quantitative easing. Now, of course, if you continue on with this move, we basically have, neutrality here just about 3 months after the Fed started quantitative easing. So, of course, I'm nitpicking what happened just after QE started, but then you have your COVID-19 pandemic, which we're not going to really take a look at because, that's a black swan event. And then what you have to Bitcoin after is QE going crazy and the price of Bitcoin obviously going up alongside the federal balance sheet climbing as well. So if you take a look at where we are right now for Bitcoin, we know that, we're at $93,000. QT has ended, but the federal balance sheet still hasn't gone up just yet. So if we take a look at just how much Bitcoin has gone down ever since, it reached its all-time high, and before QE really starts, we are already down, at a maximum of a roughly 36%. And right now we are roughly 26%. So in my opinion, it's normal to see this kind of reaction to Bitcoin as we saw it in 2019, because it's going to take a little bit of time before we really see Bitcoin follow QE and to QE to really have more of an impact on liquidity conditions to hopefully bring Bitcoin back up here. Now, that's what I'm currently looking at in terms of what's happening on Bitcoin. The good thing that we can look at right now is that Bitcoin is continuing to find support on this 100-week moving average, which currently sits around 84,000. But the bad news is it's still below its 50-week moving average. I do think that we need to break back above this 50-week moving average, which is currently around $102,000 for us to really see the next move on Bitcoin. And that is likely going to be something like this, where we're going to have the ultimate test when Bitcoin reaches that price and whether or not it wants to go up or whether or not it breaks back down. Those are two tests that I am still waiting on to really identify what will be the next phase for Bitcoin in the next few weeks or months, or however long this takes to happen. Now, before we switch over and quickly take a look at altcoins, if you want to stay up to date with the crypto space, we do have a Discord. It's a private one. The first link is in the description below. In there, you're going to see what I'm buying, what I'm selling, despite the current market conditions. You're going to get all this information before, direct access to me, some of the private sales that we have access to as well, and you're going to be able to join a community of like-minded people. One of the best ways to stay up to date in crypto is by being involved. So if you are interested, check that out. If not, make sure you subscribe and smash the like button. And I wanted to also highlight another aspect as to where we currently are in crypto. And of course, we've looked at Bitcoin, we've looked at the stock market. We're going to take a look at altcoins. But before we do, if you look at the fear and greed index of, crypto, even though the stock market is seeing neutrality, we are still in the fear for crypto. So again, it is going to be a matter of time. And if Bitcoin's able to break above that 50-week moving average to bring back altcoins along with it, that is likely going to bring us back to neutrality in terms of sentiment for crypto. Now, another topic that has been very, very recently, brought up by many people is that this whole idea of the 4-year cycle is broken. I still remain on the fence about that because typically we've seen Q4 tops for Bitcoin over the last cycles. Although liquidity cycles and business cycles have been different, that is undeniable. So you do have pros and cons for either narrative. Now, of course, we're just going to have to trade the market that we have and see what happens in the future. Nobody has a crystal ball for this. But if we take a look at this tweet here, we know that the US government has over $8 trillion of debt maturing in 2026. Basically, what that means is that the Fed is going to have to refinance that debt, and they are now currently seeing interest rates of 3.5 to 3.7%, which is a lot more than when they financed this debt back in 2022. So there is a massive amount of stress on the government to lower interest rates and to bring on quantitative easing to hopefully reduce the tax implication that they have to pay on these debts. As you know, they refinance it at a higher rate. They're going to pay trillions of dollars in interest. And of course, if they have QE and lower interest rates, well, they're not going to have to pay as much. So that was a narrative that was brought by many different people up to this point. But I wanted to highlight it because yes, it does make sense. But whether or not that's going to make an impact in, what happens in 2026 is yet to be seen. But here, Raul is basically saying that the 4-year cycle that we had, liquidity cycles that is, has been shifted by a year because in 2022, the US government actually added an extra year to that debt, which is maturing in 2026. And we're talking about $8 trillion of debt. So it is a big number, and they would have the incentives to try and get the best rate possible to pay the least amount of money and thus bring liquidity back to the markets in order to do so. And if you take a look at, the 4-year cycle that we've had and why we haven't seen that liquidity just yet, well, it's because the debt is happening in 2026. The debt refinancing is happening in 2026. And that is what Rahul is, explaining here, that we are about to see that liquidity explosion, and slowly but surely we've seen it coming with QE starting slowly and interest rates continuing to go down and the Fed not putting a pin on more interest rate cuts. So with that mouthful out of the way, if we take a look at two last charts for your altcoins, first and foremost, Bitcoin dominance versus the federal balance sheets. We've looked at this before. We know that, the Bitcoin dominance actually topped out when the federal balance sheet started going up. So when the Fed actually started QE back in 2019, we had the top of Bitcoin dominance for the better part of a year before we had, a second peak, which was essentially just a wick before we really saw Bitcoin dominance go down and the altcoin season, start. So if you go to where we are right now, we are about to see this happen on the federal balance sheet. We are about to see the inflection point that, the Fed is going to start buying back those treasury bills, and we are about to see that inflection point where the balance sheet goes flat and then really starts going up as the Fed continues QE. So in my opinion, it's going to be at that point where we could potentially see Bitcoin dominance top, and whether or not that's in, a couple weeks or a month's time, we could see Bitcoin dominance continue to go up here, up until that time, which would also make sense for Bitcoin to go back above the 50-week moving average and to also reestablish an uptrend to hopefully go into another uptrend with better liquidity conditions. Now, of course, after that point, that would mark the top of Bitcoin dominance, and then you would have, the rally of altcoins, and hopefully you see that altcoin season like we saw in prior cycles. Now, the last chart is the one we've always talked about, and everybody's talking about it at this point. We have total 3 minus USDT divided by Bitcoin. As we know, altcoins stopped bleeding on Bitcoin's pair when the federal balance sheet started going up. That was a month after quantitative tightening. We're about to see that happen again. Whether or not altcoins stop bleeding against Bitcoin is yet to be seen, but that is what happened in 2019. And in yesterday's video, we explained that even though alts versus Bitcoin did bottom when the federal balance sheet started going up, the alt's USD value didn't necessarily go up at the exact same time as alt's Bitcoin pair bottomed out. So there was a bit of a delay, and we could see that yet again. But ultimately speaking, all of these, conditions are making us see that yes, liquidity conditions are going to be better, but Bitcoin right now is below its 50-week moving average. Altcoins right now are still waiting to bottom, and that, in my opinion, is what we're going to see in the next few weeks and months to come, which should be exciting if you are an altcoin holder, because let's not kid ourselves, it's been absolutely horrible holding altcoins. So with that said, I hope you guys enjoyed the video. If you did, smash the like button. Check out the link in the description below for that VIP Discord. And of course, if you are new to the channel, do me a solid, smash the like button and subscribe. Only about, 40% of people watching this are subscribed. So make sure you hit that subscribe button. And with that said, I'll catch you guys in my next video. Peace.